welcome back. It's MPC decision day, and so let's, before we go to the commodities market, let's get a feel of what stakeholders in the real sector are expecting. We had the President Bola Tinubu, saying that he would prefer to work with a single-digit interest rate. But let's see how possible that is from the perspective of the Chief Executive Officer of Coleman Wires and Cables, Mr. George Onufowokon. He was with us in the studio. Mr. Onufowokon, good morning. Thank you for your time.
Good morning, Nene.
I'm sure you were happy when you heard the President say he wants a single-digit interest rate. Here now, the MPC started meeting yesterday to meet today, and they have inflation staring them, right there in their faces. I'm wondering how we will get to that single-digit interest rate.
It's going to be a tough call, but it's not impossible because it's been done before. It will be an intervention whereby you'll be having either government intervention, CBN, through the CBN in a way. Now, it most likely has to come in as a palliative, as part of what they're trying to do. Irrespective, you're already having a problem, and I don't know how MPC is going to cope today, because you're looking at inflation at 2.74 as of last month, and you're looking at it going up month in, month out, 22.44 in May, 22.2 in the month. Yeah. So you're getting a consistent, but it's marginal. Now, the question is, because we're having a marginal increase in inflation, we're still having a push. Now, the tendency of everybody, which is typical economics, will actually be looking at how do we drive down inflation. We actually increase the base rates. Now, we've had a 500 basis point last time for May. Now, to go up, in my own opinion, that's my own personal opinion, is tough. Now, because we're having marginal increase in the inflation, it's better we stem that if what we have done so far has actually reduce the pace at which inflation is actually increasing, can we consider a stability in holding rates as of now? That is our own expectation as a manufacturer in the real sector, because you're already having the problems associated today with the increase of the MPC. So far, base rate moved up, interest rate moves up, commercial rate moves up, and the cost goes up. So invariably, it's ending up passing to the end user. And if the government wants stability, there's going to be a catch-22. You want savings. The whole point of increasing interest rate is to try and create more savings, is to try and create more investment, institutional investment, foreign direct monetary investment, money market.
But it makes it more expensive for businesses like you, to get funds.
It does. So you're in a catch-22. But it's also, for me, there's lack of understanding, because what we're doing is we're throwing an hammer at the wrong thing. Now, what I mean by that is that we're using macro policies, which are the monetary policies, to try and fix both macro and micro policies. The micro policies are the physical policies, where the government needs to play hand and balance whatever monetary policy you're trying to do. At the moment, we have a mismatch. Now, you have monetary policies, treasury.
But we had CBN intervention during the time of Mr. Emefiele. We had a huge of that. I thought that was supposed to balance.
That helped greatly. If you look at the number of years that actually happened, though, look at the numbers that actually got it, look at the benefit, the agro policies, the intervention in agro, it swung in the wrong direction. In some cases, it swung in the right direction. In some cases, we pushed up rice, but we left cocoa that we could do export on. We pushed up other products, tomato, but we left cashew that we could export. So,
but even with the rice, I mean, a lot of Nigerians still eat imported rice, even with the intervention in rice.
Because the drive for the actual intervention did not impact as it's supposed to. Because for my own opinion, a lot of people that actually got the funds felt that it was national cake. And if you look at it today, they should go and bring out the statistics of how many people actually paid back those agro rice deals. But when we look at it today, and when we look at the impact to the real sector, do we need more increases? I don't see it, because if you look at Treasury bill rates today, as of July the 12th, it's 5.94. So if the savings rate or the government treasury bill investment rate is sitting at 1 year rate is sitting at 5.94, I don't see what the benefit of an increase would be. It's only going to be bottom line on the real sector that you're going to slow down even more the real sector growth. You're going to slow down the growth of each business because the cost of borrowing goes up, working capital capacity or capability actually reduces because they're actually looking at it in a different light. Now, if I start reducing cost, increasing cost of fund, invariably you pass it back on. Capacity reduces, you pass it back on because there's going to be a demand push issue because I don't have enough stock to give you. I'm going to increase the cost of whatever I have left. And that you're still going to force the same problem. So they have to be simultaneous with whatever decision. As the CBN is meeting today, there must be government policies that are going to cushion whatever is going to happen. Take, for instance, and I'm looking at the figures, yes, customs moved rates of calculation to 770 for duty rates. It was 460. You move it to 770. Anybody importing raw materials, that's a physical policy side. It's automatically taking the figures up. So whether we like it or not, inflation most likely will still rise a little. But we need to rebalance. We cannot throw the hammer on the wrong thing.
Well, you know, sometimes we ask the question, you talk about balance, we talk about coordination, because on the one hand, it seems the government wants to encourage growth and more economic activities. On the other hand, it seems the government is discouraging growth. I mean, government, customs and all of that, they're government agencies. So, I mean, they ought to work as one with one objective. So sometimes you just wonder, I think somebody said perhaps we need a coordinating minister for the economy who will bring these things together, and before any policy goes from any government agency to the people, it is scrutinized on the table of balance, you know, before it goes out to the people.
I think the sad part was that under the previous government, we had a government that literally had the CBN trying to manage both macro and micro. He had a very weak finance minister. Sorry to say, she was very weak. So it gave the opportunity to the macro guy to actually feel he's in control. It shouldn't be. It should be actually a joint. If you look at the previous government under Okonjo-Iweala, Soludo, the group, it was balanced because the two actually understood what they both needed to do. You need a strong Minister of Finance, you need a strong CBN governor. Combined, they do the work together. They cannot do it separately. You can't have one feeling that the rest, the second guy or the second person, does not matter. So we need a balance. So I think going forward, that would be what they'll be looking for, is to have both very strong, but both coordinating. The word you use is the right word. We need to coordinate. You cannot do it singularly. We've been doing it singularly for 9 years. We need to change the philosophy to coordinating both macro and micro policies that work in the favor of the actual country, not individual or case may be one sector over the other. It needs to be collective, that everybody grows simultaneously. We have an opportunity today in this country that we've taken off a lot of headache from all this subsidies and the rest, but now is the time for them to balance both macro and micro policies together.
All right, we do hope, even though the MPC is at its meeting, we hope they're listening and this will, one way or the other, sip into their decision that we expect to be announced later on. Thank you so much for coming all the way here. Mr. Onofo Okon, the Chief Executive Officer of Coleman Wires and Cables.
Thank you.